So, folks, recession risk grows larger. Stocks getting clobbered. That's the subject of the riff. Yep, recession risk larger. Stocks getting clobbered. Investors who were irrationally exuberant just a few weeks ago now running for the hills. Stocks are getting clobbered with the Dow down 2,000 points in the last 3 trading days. There may also be some politics to this story, as chameleon Kamala Harris polling better than Joe Biden was. Well, that's a low bar. And no matter what she says, we do know she hates business. The real meat and potatoes of the market slammed down, rising unemployment, coupled with falling consumer sentiment and an overall recession-like weakening of the economy. The data are incomplete, but without question, a nearly 1% point rise in the unemployment rate this year strongly suggests the economy is on the front end of a recession. Just last month, 352,000 people joined the unemployment lines, and actually over the past year, the number of unemployed has risen 1.3 million. While the jump to 4.3% in the last 4 months is worrisome for unemployment, an even broader measure of labor market weakness, the so-called labor impairment rate, or the underemployment rate, it's leapfrogged to 7.8%. That includes part-timers who want full-time work, plus discouraged workers who left the workforce, and that's the soft underbelly of the Biden-Harris labor market. Meanwhile, over the last year, Biden-Harris policies have led to 500,000 more part-time workers and an actual negative 500,000 drop in full-time workers. Plus, their catastrophic open border policies have led to an increase of 1.3 million foreign-born workers and a 1.2 million decline in native-born. In other words, it's been a far shakier economy than most of the media has ever been willing to admit. And let's not forget a recessionary first half of 2022 when real GDP fell 2 consecutive quarters, mostly from inflation stock. So much of this can be traced to the affordability crisis, where Biden-Harris Consumer Price Index gone up 20% over their full term. Hourly wages have risen only 17%. In other words, for 3.5 years plus, typical families, typical working folks of all different stripes have suffered a pay cut in what Ronald Reagan used to call take-home pay, and their taxes have gone up, not down. It's too expensive for them to live in the Biden-Harris economy. And Biden-Harris fiscal policy is spent and borrowed like there's no tomorrow. Now, other recessionary indicators, plunging home building and sales, even weaker consumer spending, continued declines in factory surveys. So stock markets hate recessions because recessions drive down profits. And profits are the mother's milk of stocks and the lifeblood of the economy. As recession fears rise, everyone's blaming the Fed, sure. But the Fed has been pumping in money ever since the financial meltdown in 2008. And Wall Street has always loved easy money, haven't they? And technically, investor sentiment way too high. That set up a bear market on top of the weak economy. And technically, the $20 trillion yen carry trade, where investors in Wall Street and Tokyo borrowed ultra-cheap yen to invest in the so-called magnificent tech stocks, well, that trade has come to an end. So with 92 days before the presidential election, the question is, who do you trust to pilot the American economy out of the danger zone? No matter how many times Kamala Harris tries to cover up her radical policies, she is still a big government socialism who hates business. She will continue the Biden-Harris war on fossil fuels and big government socialism. All right? It's anti-business, no matter how large or small. Mr. Trump, on the other hand, well, he's the pro-business guy, and he understands you can't have employment without employers. So if you're worried about an economic or stock market meltdown, who are you going to trust? Me? I'm taking the business guy. That's a shocker.